now we've got one more before the coffee break. West Red Lake is coming up next with Amandip Singh, who's in corporate dev. And these guys took over the old, well, not the old, the kind of new Madsen mine that ran into trouble, and you guys are trying to make a go of this thing.
Yeah, absolutely. Hello? Can you guys hear me? Perfect, guys. Thank you so much for coming out to see our talk. We are West Red Lake. We operate in the Red Lake district of Ontario. Basically, I was really excited to come back and talk to you guys. I remember when we did this earlier, we talked about, we always talk about that old adage, the 3 strikes, you're out. And this business, you never really get 3 strikes. But I promised you that us at West Red Lake, we'd give you guys a solid 3 chances at success. And certainly 2 of those 3s we've hit on. And those 3 were organic growth within our property base, accretive M&A, and a possible discovery. And the possible discovery still to happen. We have 80-kilometer land package. But in terms of success by the drill bit on our own assets, if you look at the drill results that have come out of our own project, nothing short of spectacular. We put out additional drill results from our Madson project. Absolutely wonderful, and certainly that promise on an accretive M&A and transaction really did come into fruition, and that was with our Madson asset. Realistically, when you look at what the team has done, I've been very proud to be a part of this team. I think as a company, we've really only been a company since the start of this summer, and in that short period of time, I'm proud to report we've raised $50 million, closed on 2 acquisitions, brand new slate of directors, brand new management, and certainly have drilled 25,000 meters and come up with nothing short of spectacular results. In terms of our 2 acquisitions, one originally when we started the company was our Rowan deposit. We did complete that acquisition and we 100% own it. It originally was a JV interest that we had with Evolution Mining, and certainly the Madsen asset was our big acquisition. We just closed on that towards the end of the summer, and going back in there, we are marching forward to put this into production. Also, the drilling that we've been doing outside of Madison and within the mine plan has just proven to be even more spectacular than we had originally anticipated. In terms of that new management, I think a lot of you know who we are. When you look at our board of directors, Tony McCooch from Kirkland Lake. This is a gentleman that helped create the world's lowest cost, highest grade gold producer, Duncan Middlemiss, who you guys are all familiar with at Wesdome, but certainly our management speaks for itself. I think, one of the things that really gives us an inherent advantage is putting a mine back into production, building a mine. This is all part of our core competencies, and certainly we look to execute as we have been doing so far. Again, here it's one of these things where I look at our management and our board, and I'm very proud to be part of the team. I urge people and I challenge people to find another company that's a $100 million market cap that can boast the bench strength that we have, and I can assure you it would be very hard to find. In terms of the Madsen Gold project, we're not reinventing the wheel. Simple sort of strategy. The engineering there has been fantastic. We'll walk you through through all the infrastructure that's been in place. $350 million has been spent there. We see what we need to do is de-risk the resource. As it goes on, it is on care and maintenance. We have reduced our carrying costs to the absolute minimum to keep our permits active. De-risking the resource, we are going to drill 38,500 meters next year. That is going to tie into our restart planning. We are doing 3.2 kilometers of underground development next year. And we look to execute and initiate that restart and be back into production sometime mid-2025. In terms of, just a summary of our acquisition, we throw that word transformative around a lot, but this truly was transformative. When we walked into this acquisition, we tripled our mineral resource. We have nearly 3 million ounces on the books. We have doubled our land package in the Red Lake area. And this is an asset that, if you guys all remember, at one point in time commanded a $1.2 billion market cap. In terms of the infrastructure, brand new a fully permitted mine and mill, 800 tons per day. It operated at 1,000 tons per day, and we can expand it to 1,500 tons per day with minimal alterations to the permits. But I think really what's really incredible here, when we came out here earlier this year and we promised that we'd do something accretive, I think when you look at those acquisition terms, we paid $6.5 million cash. At the time, that was worth $10 million in stock and 1% NSR on the Madsen mine. So certainly this materialized into a historically all-time low valuation. Just to give you a sense of where that $350 million was spent, double ramp access, underground equipment. We've got a shaft, our mill, excess tailings capacity, water treatment facility. Here's a picture of our mill. Obviously, the housekeeping is immaculate. It's not in production, so it's not going to be as pristine when we start running it. But certainly, it gives you a sense of what the engineering team had done and what the asset has to boast. Again, this is a mine with a checkered history. We knew that we would be faced with these questions. What are we going to do differently? What went wrong? And our due diligence process was in fact driven by that. What we had noticed was, I think a lot of the motivation and a lot of the strategy with the previous operators was in the pursuit of a sale. When it came to project financing, taking on debt too early, when it came to deferral of capital, so many things that should have been CapEx were pushed into operating costs. Things such as primary crushers. Certainly in an underground mine, you should own your own primary crushers. That didn't happen. There was underinvestment in the underground development. There was no stockpiling of ore. Really, everything was trying to be packaged up to be sold. But when the valuation ran away from the company, I think those very suitors that were once interested no longer were. And I hate leaning on that time that we were all wearing masks and on house arrest, but certainly COVID did affect them. Breakdown of supply chains. They had COVID outbreaks at the mine, and the mine went offline for several months during their ramp up, and certainly didn't do them any favors. I think we briefly went over this. Our plan: de-risk the resource, get into that restart planning, and then certainly execute. And you are again looking at a mid-2025, which a lot of people will say it's fully permitted. Why not just start the mine tomorrow? Well, I'd say we're taking a cautiously aggressive approach. I'd be hard pressed to find any other projects that will boast 70,000 ramping up to 100,000 ounce of production coming online within the next, let's call it 15 to 18 months. So certainly we are steering the course, and we are marching as quickly as possible. In terms of our plan, this slide right here, it actually highlights two problems and shows how we're going to mitigate those risks. What you're seeing there, what's circled in the lower risk, that is where the previous operators sourced their ore from. It is closest to surface. Unfortunately, closest to surface is lower grade. When we looked at 18 months of production records, what we noticed was towards the tail end of that production run, certainly the team was beginning to turn things around. They had just run out of some runway. What we've circled there, that higher grade, that's known as the Austin zone. That's going to be our focus. Before we get into operations, that 38,500 meters of drilling is going to focus there to delineate at least our first 5 years of production out of this zone. When you look at the production records, you look at the tail end, the August 2022 production month, the previous operators were ahead of guidance, 95% recoveries. They produced nearly 6,000 ounces. The head grade was finally coming in at 6 grams. And that's because they were finally scratching that Austin zone. And that's where we look to initiate our start. In terms of, the 2 million ounces that exist, are there more? Well, the answer to that is certainly, and I think our drill results from last week definitely demonstrate that. But what you're seeing here on this slide, you're seeing several multi-ounce intervals, and those are all outside of the resource block model. So that just kind of points towards, where that low-hanging fruit, easy to expand resource exists. Regionally, 47 square kilometers at Madsen alone. Then there's 31 kilometers at our Rowan project. So certainly, that potential discovery is definitely out there. So hopefully we go 3 out of 3 for our avenues of success. Let's call it. This is the Rowan and Madsen project. We do look to envision a scenario where ore will be trucked from our Rowan project to be processed at the Madsen milling complex. We are the only mill in the area that is not operated by a senior producer. When you look at the results that came out of Rowan, we did the met work. It's very amenable to being processed at our facilities. Most of this ore, unlike any other Archean greenstone belt, a lot of the gold does report to gravity. So, we are very excited to see how that ties into the future of the project here. We will be putting out an economic study sometime next year in the first half of the year, and that will envision a scenario where we online material from the Rowan asset into our Madsen asset as well. Again, just very typical, 100% owned, very typical of the area. We've got 830,000 ounces, and I think based on our drilling this year, you will see upside either on the grade or the ounces. Again, just typical of the area. In terms of the structure, these are steeply dipping ore chutes. We've only drilled this down to about 550 meters, but if you know the area, you know that those deposits extend down for multiple kilometers. So when we say we've only scratched the surface, we have only scratched the surface, and our drilling is showing that the grades do increase, and we're finding a lot more continuity in this ore body as we get into those deeper zones. In terms of our cap structure, we will be closing on another $15 million on November 27th. So we will have nearly $25 million at the start of the year. When you look at our shareholder registry, we have become a very institutional product in our short life as a company. The Van Eck Gold Fund, certainly Sprott Resource Lending, and a lot of the other traditional gold institutions own our stock. I think if you've tracked our stock trading over the last little while, we do enjoy an unprecedented amount of liquidity, especially relative to our peer group. So I think there are a lot of qualities that West Red Lake boasts that would make it attractive to the investment community, as the share price and our ability to raise capital has demonstrated. But that's about it. It's a very simple story, not very many moving parts, and I believe we have about 3.5 minutes. We got through this pretty quickly, so I'd be happy to address some questions or concerns that you have. Yes?
Do you need additional money for project?
Yeah, I believe somewhere in the range of about $50 to $60 million will be the entire. Will fund the entire restart. But we are marching towards that restart as is. So we will raise that money as we go along.
You do it yourself, or you find a partner who's?
I mean, as of late, we've raised $50 million on our own. I think we'll get creative with our funding strategy as well. But again, if a viable partner does emerge, certainly we will consider that. But we are looking to self-fund this moving forward. Yes. Excuse me? Correct. But as opposed to the milling complex of any other mine, this is 800 tons per day. There are we have multiple ball mills in the area, and correct. Yep. It's 800 tons per day milling complex, plus there's a paste backfill plant. There's a lot more to it than just a ball mill. No, certainly not. Certainly not. There's certainly contingency plans, and we've mitigated that operating risk. Yes. All right. Well, guys, thank you. Okay, please.
One question, I guess, is so am I right that $350 million worth of equipment that you picked up for $6.5 million?
Correct.
So can you give me a little bit more color on why there weren't more bidders in there? Like, how did you manage to? That sounds like the deal of the century. Certainly,
and I think this is going to be one of those deals that we talk about. At gold messes of the future, we will be talking about this. But I think it wasn't a non-competitive process. There were other bids, but Sprott Resource Lending, I think their goal was to recover $150 million. That is what they had sunk into the asset. So I think they wanted a deal that was equity rich. They do in fact own nearly 24% of our company, whereas I think a lot of the other bids may have been more cash heavy. In terms of I think they needed to have some comfort in our ability to finance this. Certainly with personalities like Frank Justra on being our largest shareholder, I think access to capital, they had a sense of comfort and decided to go with our group.
Great. Thanks.
All right, guys. Thank you so much for your time. Appreciate it.